And it just shows the Robotaxi network is not priced into Tesla stock at all. It's simple. The more vehicles you have operating on full self-driving, the quicker you get to a fully autonomous vehicle, the quicker you get to massive long-term streams of revenue, which is the Robotaxi network. Well, hey, times that by today's valuation of 69.41. Now Tesla stock is 457. This is a very important video for all Tesla stock investors, and we will break down the significance of all of the news for Tesla stock in this video. If you would like to grow your net worth and reach financial freedom as quickly as possible, I need a show of votes by smashing that like button as well as subscribing to the channel. So the first bit of news that you're not going to hear talked about on any other Tesla stock video is actually a piece from Barron's that just came out today. And trust me, I looked through all the videos out there. Nobody's talking about this. And I think it is important that you should know as a Tesla stock investor. Barron's writes, Tesla stock's drop might have had nothing to do with the new Model 3. We know this, okay? It didn't have anything to do with the Model 3. So I don't even know why it's titled as this, because we know the Model 3 has been getting raved about as far as auto reviews, and we know demand has been very good where the Model 3 refreshed edition has been launched. We're not worried about the Model 3. The prices actually just went up on the Model 3. This is a big positive. Now, on face value, we thought, hey, the price cuts on the S and X, that's what probably caused Tesla stock to fall 5% on Friday. But apparently, it's actually the price cut of FSD that caused Tesla stock to fall 5%. But wait, if more people buy FSD, isn't that a good thing for margins? The answer is yes. But Concord has their own take on this. George from Concord said a cut didn't seem to be imminent. Quote, the price of FSD is actually very low. It's not high, said Musk on his company's second quarter earnings conference call in July. The value of the car is increased dramatically if it actually is autonomous. If the car is worth several times its original price, $15,000 is actually a low price for FSD. Musk also suggested on the conference call that people could test FSD as a monthly subscription. Maybe lowering the price is designed to increase the number of people experiencing the system. Tesla didn't respond to a request for comment about the change. George says this, we see the price cut as reflecting weak FSD penetration rates. Adding, the cut is likely an attempt by the company to accelerate its razor to razor blade model. In this instance, the car is the razor and the FSD software is the razor blade. Now, George is actually a Tesla bull. He rates Tesla stock a buy and has a $293 price target for Tesla stock. Tesla is a little cagey about the numbers of customers who have purchased FSD, but 400,000 was a figure floated at the March Investor Day. At the time, Tesla had sold roughly 4 million cars globally, giving a take rate of about 10%. Tesla's take rate would have to improve to about 13% to break even on sales at a lower price point. It would have to do a little better than that to break even on gross profit generated from FSD sales, requiring the take rate to go to something closer to 14%, assuming average software profit margins. If the take rate doesn't change on the price drop, Tesla is probably putting at risk roughly $130,000 in gross profit in the final 4 months of the year. That's a little more than 1% of the gross profit Wall Street forecasts for the second half of 2023. This is what everyone is missing and is so important for you to know as a Tesla stock investor. Concord just said if the take rate for FSD remains the same it's been at, roughly 10%, following these price cuts, Tesla will sacrifice around $130,000 of gross profit. Not even net profit, gross profit. So your net profit's even lower than that. So on a risk to reward basis, odds are more people are going to opt into getting full self-driving. But really, what's important for you to know? That's great. The risk to reward looks really good. There's a 98% chance Tesla actually sees more money coming in from FSD and a higher take rate because they cut prices $3,000. Overall, probably a 2% chance this is a net negative for Tesla's earnings. So that's great. But why did Tesla just cut prices on FSD the day after the Highland was launched? They want people driving on FSD with level 4 hardware. That's why they cut the price of FSD. They want to train FSD as fast as possible. And getting more vehicles and hardware 4 is really necessary to do so. And I personally think Tesla's probably going to cut the price of FSD down to $10,000. And I think the ultimate take rate could be over 20%. So essentially doubling the take rate by reducing the price of FSD 33%. That seems like a win-win to me. Now, I don't expect that too soon. I think that's a couple months away at the bare minimum, maybe by the start of 2024. But don't be surprised if FSD gets cut another $2,000 by the start of 2024. This could cause knee-jerk reactions with Tesla's share price. This is a big time long-term win as a Tesla stock investor. But don't just take my word for it. My estimates sound like pennies in regards to FSD pricing. I think that will be cut to $10,000. Meet Kevin. He suggests Tesla cuts FSD prices way more than that.
But the reality is, going from $15,000 on FSD to $12,000 is stupid. FSD, at least A/B tested, should be reduced to $5,000, $4,900 if you pay for it outright, $500 per month for the first year, so $600 if you finance it over a year or whatever, which is fair because then people can see, okay, this is my payment with FSD, but it's only the first year and then it'll drop off. People would go for that. I believe that you'd probably on new purchases have somewhere around a 75% take rate. Whereas I think this $12,000 to $15,000 level puts you somewhere either below 10%, but certainly under 20% of a take rate. It's too much money. It takes this, $29,000 car with federal tax credits and turns it into a $42,000 car. No. And this is not the right way to play it, in my opinion. I would rather see FSD take rate 5x. When you 5x, you're going to make net more money. Think about it. 5x the sales at $5,000 is $25,000. 10% more sales at $12,000 is what? $1,200 more. You see what I mean? Like, we really want to get a substantial boost in the take rate because it's basically pure profit. Turn the frickin' switch on, and now you actually make the vehicles a lot more saleable because the total cost of getting into Tesla and FSD is amazing.
I would love your take on this down below in the comment section. Should Tesla cut prices further on FSD, and where should they cut prices to? Is it 5,000? Is it 10,000? Is it in the middle around 7,000, 7,500, around there? Let me know your thoughts on this. My take on this is, well, if you're a bull on Tesla and you want to see Tesla do well, earnings are what is important right now. And obviously, there would be some uncertainty if Tesla did cut prices that much on FSD. And some people would not be happy. But the fact of the matter is, the lower the price of FSD, the more people that will buy FSD, the more profits Tesla will make. That's the bottom line. The other quote-unquote bottom line that I think is important to remember that I think a lot of people miss, and Wall Street certainly missed this on Friday, and it just shows the Robotaxi network is not priced into Tesla stock at all. It's simple. The more vehicles you have operating on full self-driving, the quicker you get to a fully autonomous vehicle, the quicker you get to massive long-term streams of revenue, which is the Robotaxi network. Tesla now has a $300 million NVIDIA H100 GPU cluster that is online. Pretty soon we will have the Dojo supercomputer online, which will be the second or third most powerful supercomputer in the world. Tesla has the capability to process more than 400,000 vehicles of data every day. And out of those vehicles, how many hours are actually being driven on full self-driving every day? Well, Tesla has the computing power, or very shortly will. So the more vehicles that have FSD now, well, it will make that fully autonomous vehicle a lot faster. 2024, 2025, 2026, you could shave off a year or two potentially by having more vehicles out on the road to train FSD. And I think that is something that is wildly missed by Wall Street and even missed by the bulls. This is great. You want as many people in full self-driving as possible. And this is only one aspect of Tesla's business. Again, you're not investing in Tesla for one-time sales of FSD. You're investing in a long-term vision, the Robotaxi network, which will bring in billions of dollars every single day for Tesla. That's what you're investing in. Not to mention the robot or energy storage that could eventually become 50% of Tesla's annual revenue. I think it's pretty simple. The lower, the better. Let's model this out for a second and see where Tesla stock could go if the take rate went higher for FSD, but the price was lower. Last quarter, Tesla sold 466,000 Teslas. If the take rate for FSD is 10%, that would be FSD sold 46,600 software units in the last quarter. Times that by 15,000. And Tesla brought in $699 million of revenue from FSD. Now let's use those same numbers. Again, last quarter, Tesla sold 466,000 units. If FSD had a take rate of 75% at $5,000, let's use those same numbers. 466,000 units sold in the last quarter at a take rate of 75% for FSD. That would be 349,500 units that could have potentially included full self-driving last quarter. Let's times that by 5,000 and you come to a number of 1.74 billion. It's thought that FSD has a profit margin of around 90% because it's software. The last quarter, Tesla likely seen around $629 million to the bottom line based solely on units of FSD being sold. In theory, if FSD was $5,000 with a take rate of 75%, Tesla would have seen about $1.6 billion of net profits to the bottom line on sales of FSD last quarter. If we extrapolate these numbers and just go off of 466,000 units, times it by 4, I know it's not the best way to do it, but that's how we're going to do it. You times that by 4, that's a net profit to Tesla of around $2.5 billion if last quarter repeated itself 4 times in a row. We know, again, the numbers vary, so bear with me. This is only for a reference. Again, $2.5 billion of net profit. That's great. But in theory, if FSD was lower and the take rate was higher and you did the same calculation, well, Tesla could have brought in $6.3 billion for a full 4 quarters to the net bottom line. Tesla currently has 3.47 billion shares outstanding. So if you divide 2.5 billion, which is based on $15,000 FSD, again, this calculation that we have made to try to figure out the EPS benefit of FSD to Tesla today, that's around 72 cents per share for a full 4 quarters. Now, in theory, again, if FSD was $5,000 and it had a 75% take rate, you could potentially add, just extrapolating last quarter and putting that 4 quarters in a row, $1.81 to a full year of EPS. Tesla's current estimated 2024 EPS is $4.76 per share. So on a new calculator, we'll go ahead and put in what could have been the EPS, again, based on a lower price of FSD, and minus that by the estimated EPS boost the FSD will give us. That is a difference of $1.09 of EPS. Tesla stock has a current PE of 69.41. This is because the trailing 12-month EPS was $3.53. Now, Wall Street Journal's estimates for Tesla's 2024 EPS is $4.76 per share. So we're going to times $4.76 of EPS times that by today's PE ratio for Tesla. That equals out to a Tesla share price in 2024 of $330 per share. That is expecting 27% delivery growth, the lowest in Tesla's publicly traded history, and 29% EPS growth. So I think these estimates are far too low. Just let me put that out there. But if we go ahead and add a theoretical $1.09 of additional EPS due to, again, a higher take rate of FSD beta of 75%, on the price of FSD beta being $5,000, and the net profit margin of, in this case, my estimates would add $1.09 to EPS, which is over $3 billion of additional profits for next year. That would bring your actual EPS to $5.85. Based on today's valuation of 69.41 for a PE ratio, that would put Tesla stock next year at $406 per share. Virtually a new all-time high based on that alone. But wait, what if Tesla's EPS came in more in line with what I expect, around $5.50 per share for next year? Well, at a theoretical $1.09 of EPS boost, that leaves you at a actual EPS number for 2024 of $6.59. Well, hey, times that by today's valuation of 69.41. Now Tesla stock is $4.57. That's why this could actually fundamentally, in the nearer term, help Tesla's earnings so much if Tesla does reduce the price of FSD. Now, you could do this same equation for a $10,000 FSD, in which we will do right now, just for those of you guys that stuck around and watched this video until this point. This is a more realistic boost to EPS that we could see based on a more realistic price cut for FSD. Again, I think FSD likely gets cut to about $10,000. So this is a lot more realistic than $5,000. Now, I believe if FSD was cut to $10,000, you would see a take rate of about 25%. That would have been in the last quarter 116,500 purchases of full self-driving at $10,000 per unit. That would have been 1.165 billion of FSD sales. Times that by 0.90, an estimated profit would have been about $1.5 billion. Go ahead and times that by 4 to extrapolate 4 quarters, and you would be sitting at about 4.19 billion of a yearly potential profit. Now, if we go ahead and divide this by the total amount of shares outstanding, which is about 3.47 billion, to figure out the EPS, that would be an EPS boost of about $1.20 per share. That is, again, compared with the current estimate of 72 cents of an EPS boost for next year. And if we go ahead and do what we did right here in the previous example by minusing the potential EPS boost of FSD being 5,000 and a take rate of 75%, and do that same thing to here of minus the 72 cents to that, which is the estimated current EPS boost. Go ahead and do that right now. That would be an EPS boost still of about 48 cents higher than what we are expected to see for next year with current pricing. So if I think Tesla will do around $5.50 of EPS for next year, just organically as it is right now, and we add this 48 cents potential boost to EPS, that would be an EPS for next year of $5.98. If we times that by today's valuation that Tesla is being assigned by the markets of 69.41x, that would be a share price next year of $415 per share. That is only if the price of FSD fell to $10,000 and the take rate was 25%. Why I think the take rate could be 25% is because $10,000 is a big psychological level, and a lot of people might opt to take that and take purchase of full self-driving at $10,000 rather than $15,000. Now, you can be more conservative here. Either way you put it, you get a share price in the 380 range to, again, depending on your take rate, of 415 based on 25% take rate. So the math makes a lot of sense to where Tesla stock is today at $245 per share. You're talking big potential profits. But hey, that's just my take. If you have a different opinion, let me know down below in the comment section. Tesla Chan on Twitter says that Tesla delivered 2,129 vehicles in Italy in August. This is 2,029% year-on-year growth. It also accounted for 52% of the BEV market, where 4,054 units were sold. One of the 2 units sold is Tesla. Last year, in August of 2022, Tesla only sold 100 Teslas in total in Italy. This year, Tesla sold 2,688 Teslas in Italy in August. This is massive growth. Under full self-driving capability, it says on the Tesla website your car will be able to drive itself almost anywhere with minimal driver intervention and will continuously improve. One of the bullet points is all functionality of basic autopilot and enhanced autopilot. They now add auto steer on city streets. This was in parentheses of coming soon for over the past 4 years. So this shows a lot of confidence in FSD and likely a lot of improvements that are even to come with FSD beta. You also have traffic light and stop sign control. It now looks like it is confirmed the Model 3 Highland Performance will be launched in the 4th quarter at Giga Shanghai. I'm just hoping by this time we get the normal refreshed Model 3 that has launched in the US, because I'm personally waiting to get my hands on one. This, I think, is actually very big news. Tesla is leading the race to draw federal money for charging networks. This does come to us from the Wall Street Journal, and specifically this is huge for EVs in general, because you need more superchargers out there. You need more chargers in general to get this mass adoption. And we're going to look at the actual map of superchargers where I live, because me personally, I don't see a lot of Teslas out on the road. And it's simple. There's not a lot of Tesla chargers. How do you buy a Tesla vehicle if you don't have many places to charge it? That's a big problem. Now, this article goes on to say that Tesla's winning bidder to build chargers at about 18% of the sites selected by states using the federal dollars to fund fast chargers, more than any other company, according to data from EV Adoption, an EV and charging analytics firm. Tesla has won around 8.5 million of the roughly 77 million awarded so far. 5 states, Ohio, Hawaii, Pennsylvania, Maine, and Colorado, have selected winners at this point, and full details on sites and designs aren't yet available. Tesla's bids averaged around $392,000 a site, compared with an average of $795,000 from others. Tesla is a whopping over 50% cheaper on average to build as many chargers as the competitors. This is massive news for Tesla, and hopefully this $7.5 billion that has been set aside via the Inflation Reduction Act for chargers will start to get rolled out pretty soon, and we'll start to see a lot more chargers out on the road. Now, Michigan, that's where I live. Ford and GM, well, they're dominant here. You don't see many Teslas unless you're in like Detroit or Grand Rapids. Those are the places where you really only see Teslas. And why is that? Well, look at Detroit. I mean, still not a lot of superchargers compared to, I guess, other states and other larger cities. You have what, 1, 2, 3, 4, 5, 6 in the kind of Detroit area, which this is a pretty big area for only 6 chargers. So they could still definitely use a lot more. But look at other areas that have pretty decent populations as well. Look at this area where there's basically none. There's one in Flint. There's one in Bay City. That's it. Look at the population for these areas. Saginaw has not a single supercharger. Not a one in Saginaw. Literally none. And Saginaw has a population of 44,000. Midland has a population of 43,000. Not a single supercharger. Bay City, Michigan has a population of 32,000 residents, but has one supercharger. Flint has a population of 81,000. Not a single supercharger. You got to go over here to Swartz Creek. So it's pretty clear. I mean, if you're looking at somewhere like California, I mean, no wonder everyone has a Tesla. Look at how many superchargers there are in different cities. But when you look at the rest of the United States, it's not the same. So I think this really pushes back on that big bear thesis as well. You know, there's just not a lot of charging infrastructure out there. Meaning there's a lot more sales to be had in the future once chargers become more readily available. Even for me that I live in Michigan, I have to make sure my Tesla is charged fully every single day at my house, because you can have long stretches where you're not going to have a charger. Or if you do find one and it's like a charge point or Blink or a EVgo, I mean, you're going to have to sit there for an hour to get 30-40% of your battery filled. It's very much not a situation you want to be in, and you can't compete with OEMs at that point. So hopefully superchargers start to get rolled out pretty soon. In other news, it looks like the first VinFast vehicle has been spotted on the roads in California. Polmar's Catalog made this post about a Tesla customer that lowered their insurance premium by $53.25 a month by using FSD all the time. This is based on one of those insurance policies that rewards you and lowers your monthly payments for driving more carefully. And I think it kind of highlights the careful driving of full self-driving. So that is going to do it for this video. That is the most important Tesla stock news that you need to know, and my personal analysis and opinion on full self-driving and actually lowering the price of full self-driving is a positive. So when you see Tesla stock selling off on this news, just remember, this is positive, and this means more profits for Tesla, which is ultimately why Wall Street sold Tesla stock off to begin with, is because they were fearful of margins and bottom line profits. Well, good news is FSD pricing has been cut and likely will be cut further. So hit the like button and subscribe to the channel. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.